Hey everybody, well it's me getting all fancy on you. I really don't think there's too much value in my poorly lit face being tucked away in a postage stamp on your screen, but why not? You know, you might as well see the mouth and the voice in sync, right? So it's Friday night after this very cool week we've been through, and I instead of, you know, the past couple of weekends, I think I've dragged you through my entire giant bear pen, and it's pretty much the same list as it has been, so there's no reason to put you through that again. Instead, I wanted to go through my 16 indexes and talk about them, some more than others, because there's a lot of cool stuff happening, and I thought it'd be worthwhile. There's probably not going to be too much content this weekend in terms of like quantity of posts, but that's okay. I don't have to do 10 posts every day, right? So this I'm going to leave up for a good long time. All right, well, let's begin. Alphabetical order, and like I said, we'll spend more time on some of these than others. We start off with the Dow Jones Composite, and here we have this chart going back to the 70s, this red line dividing this, probably what we could argue is like the last kind of honest bull market, because back then we had bear markets like these. In fact, this is kind of itching for another round to top right there, even though it wasn't much of a drop. And then we enter this new era below this red line, and we've been cruising along here. This is the post-GFC era of fakery. Then we had our COVID plunge, and most recently, we had this channel up here, which is long since broken. And then we zoom in even tighter, and we see this beautiful, oh my goodness, bar on Friday. And this was one hell of a week, because Wednesday, I was standing at this very spot, or just about 2 feet in the other direction, watching intently the ES about to open when the CPI was coming out. And there was a lot of drama, as you well know. CPI came out, market dropped, then it went roaring higher, and it got just sweating bullets, as my mother used to say, so close to a violation of this resistance line, and thank God it was repelled. And so this actually, you know, it ended up strong and up on Wednesday, but it didn't break resistance. And then Thursday it fell, and Friday it fell. And I think this is the start of something that could be much more substantial. Okay, that was the beloved wife giving me a vital dog update. Excuse the beep. In any case, yeah, so we're banging around inside here, and the key support on a kind of 2022 basis is this level down here. But this is constructive to destruction, I think, although there are cooler indexes than this cooking right now. Here is the Nasdaq Composite, the Comp Q. And in this instance, we were in the post-GFC era, within the confines of this channel, and then it went after the COVID bailouts and the $7 trillion, it went supercharged, super crazy, because it got a little below the channel and then went absolutely nuts. We had this incredible explosion. This is when all the 19-year-olds and the Robin Hoods came out, and everyone learned to trade options before they got slaughtered the past couple of weeks. But look what's happened. Look at this change. This is a big deal. This is a big change. This isn't some 1 or 2 day blip. This is absolutely, the battleship has turned around, because you look here and you can see it. This was the last, so this channel was extraordinarily swift ascent. This is a more muted ascent. But then after the peak here, after the tippity top, back just before Thanksgiving, we have shifted to a completely new market of lower, much lower highs and much lower lows, very rapid. Added to which, what we want to watch for is a failure of this trend line, which just so happens to be right where the lows in late January were, right around here. So if we can break this zone, this cluster, what's another good word? Give me a thesaurus. Can't think of one right now, but you get the idea. We need to get below these late January lows to break that red trend line and really get things cooking into the forbidden zone down here, into this giant white space where there's precious little holding it up, because the rapid ascent, it's not going to hold it. Okay. Huey, not much to say. I'm delighted gold is strengthening. I'm delighted miners are strengthening. And I applaud gold's ascent. So that's all I can say about that. Yay, gold. Here's the Dow Jones Industrial Average, the INDU, going all the way back to the beginning of the 20th century, the year 1900 back here. And we are, it's incredible. I saw a headline like today from the Wall Street Journal, naturally, saying the stocks are the cheapest they've been in years. I shall not utter obscenities here live, but are you kidding me? The cheapest that's what the market looks like. What words would we use? Astronomically overvalued? Anyone would be insane to be buying at these levels. You would be out of your mind. Those are the words I would use, not cheapest in years. But they're shills, just like the investment banks are shills. Marko Kalanovic, or whatever his name is from JP Morgan, all those sales types. So people actually think they're giving good advice. They're not. But this is the sea change here. This was the peak, and now we have an important lower high. This ain't going to be beat, probably in our lifetimes. We're not going to see these levels again. So now we're starting to crack lower. And so this is the beginning of an important, look at the size of the top compared to this little pipsqueak thing. The pre-COVID crash top was Hervé Villachez sized, This is something different. The NDX, the Nasdaq 100, kind of the same old. We broke the channel up here, and we have completed this nice little top, and we got, in fact, interesting, Wednesday, with all the power that happened on Wednesday, it did not get as close to a break as the S&P 500 or the Dow Jones Composite. So internally, it's just not as strong. The S&P 100, you can see the same kind of shape forming here. So this is the line in the sand. This was the peak from something magical about Wednesdays. 2 Wednesdays ago was here, and then this Wednesday was here, lower. And we had this glorious drop. And look at where the support is, that line here. Where does this line go? Where does it come from? It's a big one. It goes back to April of, way back here, April 2020. It actually goes back to 2010, I beg your pardon. It really goes back to 2008. I just haven't quite drawn it back that far. But the beginning of the GFC ascending channel is where it starts. That is where we found support on Friday. It would not surprise me at all to see a rally on Monday. Russia didn't invade Ukraine, yay! Because we get this toggle thing going on. Look at this, down, up, down, up, up, down, down. My southern drawl is coming back. I'm getting a little too emotional. But yeah, right to the pixel. That's where we found the support. But I believe it'll be broken. Probably the coolest one of all, the Russell 2000. My premium members saw me before this recent drop started kind of with this crazy conjecture about a rally to here and then a fall taking out this level and going, wow! First portion's happened. We'll see about the next one. But you can see there's precious little holding this up. There's really no, there's the wife again. There's no thick consolidation of activity. This is a terribly perilous place for the market to be. Ding, you're trying to get my attention. I'm talking to my people. Let's keep going. The Semiconductor Index. This did as God intended. Look at this. Here was the trend line, and we went zipping above it. When we got below it again, look where we stopped. Look what happened on Wednesday. Was that Wednesday or Thursday? It was Thursday. A perfect tag of that trend line. So neatly confined within that wedge, and then whoosh, down we go, breaking below the wedge again. I'm watching the clock here. There was a time YouTube limited videos to 10 minutes. I don't think it's 10 minutes anymore, but I still, PTSD. Here's the S&P 500. And short term, it's got this cool little Fibonacci retracing going on, which has been a pretty good guide. This is simply anchored to this extreme and this extreme. So we fell. And I didn't realize this. I just read we fell 13 days and then we rose 13 days. So there's a beautiful symmetry to that. And that terminated here. But you can see right here, this is the 61.8% level, which we tagged 2 Wednesdays ago, and then this Wednesday repelled each time and went slicing through these two next. So the next kind of logical place for support would be the next fib level down, which is exactly where all this muck is. And then, of course, hopefully taking out January's lows. Transports, never very interesting to talk about. Utilities, even less interesting. The VIX, this is something I wanted to point out. Look what's going on recently. Look at the span of time between kind of peak to peak here. So notice how big this one is. And then notice this next one shorter. And then notice this one much shorter. So it's getting compressed in terms of from one panic to another. Interesting. Things are starting to kind of, the hinges are starting to rattle and come off. XAU, gold, again, not that interesting. XBD, XMI, I'm just kind of blasting through these. Last one, XOI. This is just bonkers because I've been burned so bad. I kind of stopped bothering with energy a couple of weeks ago because I just kept losing money, which eventually I get tired of. So it just keeps going up because of Ukraine, I suppose. So it's, wow. It's at some point, I guess, at some point, it'd probably be an amazing shorting opportunity. Maybe even right this second. Maybe Friday was the greatest time in the world to short energy. I don't know. I'm just so battle scarred from it that I've stopped bothering. But it will at some point because it's getting really lofty. It'll be an amazing bearish haven. But as it is now, I'm just so scalded from it. I've stopped messing around with it. Anyway, last week, this week, a lot of trauma, a lot of tumult, but in the end, I think very, very positive for us. So I'll end it there. Hopefully YouTube is cool with the 12-minute mark. And thank you, and I will see you later. Bye.